Hello students, hope all of you are fine. Perhaps you remember that in my previous video I discussed about the value added or product method of estimating national income. Today I will be talking to you about a particular topic, that is expenditure method of national income estimation. So without delay, let us start. First of all, I would like to give you a brief concept of expenditure method. This method is the most widely used approach for estimating GDP, which is a measure of the economy's output produced within a country, irrespective of who owns the means of production. The GDP under this method is calculated by summing up all the expenditures made on final goods and services. This method enables us to understand the consumption, savings, investment behavior of an economy. Next, now I am going to show you different components of final expenditure in an economy. As you can see on the screen, I have mentioned about 4 components of final expenditure, and they are private final consumption expenditure, government final consumption expenditure, gross domestic capital formation, and net exports. Now let me give you briefing on this 4. First of all, private final consumption expenditure. Private final consumption expenditure is the money value of goods and services purchased by households and non-profit institutions for current use during a year. Secondly, government final consumption expenditure. Now what is it? Government final consumption expenditure refers to the government expenditure on goods and services. Thirdly, gross domestic capital formation. Now what is this? It refers to the addition to capital stock of an economy. It represents the expenditure incurred on acquiring goods for investment by the production needs located within the domestic territory. And lastly, net exports. Net export is very simple. It is simply the difference between exports and imports of a country during a particular period. So students, from this slide you get to know that expenditure method is nothing but that method which takes into account all the expenditures incurred in a country during a period of 1 year. Remember this. In this slide, I am giving you a practical on expenditure method so that practically you can understand the concept. Here you can see that private final consumption expenditure is rupees 1000. Net domestic capital formation is 200. Profits 400 crores. Compensation of employees 800. Rent 250. Government final consumption expenditure 500. Remaining portion of the question, consumption of fixed capital 60 crores, interest 150 crores, net current transfer from row, that is from rest of the world, minus 80 NFIA, That means net factor income from abroad, that is -10. Net exports, net export is the difference. We already know that it is the difference between exports and imports. Here it is -20. And finally, that is net indirect tax, that is rupees 80 crores. One thing I would like to tell you that whenever a question is given to you, it does not mean that all the items given in the question you have to consider. For example, you can see here in this table there are 12 items given, and it is not necessary that you should consider all the 12 items to calculate the GNP at factor cost using expenditure method. Because all the 12 particulars here are not expenditures. Some of them are incomes. So what we have been asked to do here, we have been asked to calculate GNP at factor cost by expenditure method. Since we are using expenditure method, so we have to consider only the expenditures in the table. Let me show you how to solve this problem. Here you can see that GNP at factor cost we have calculated by considering these items. What items have been considered have been displayed on the PowerPoint screen. We have considered private final consumption expenditure, then net domestic capital formation, then government final consumption expenditure, then consumption of fixed capital, then interest, then NFIA, then net exports, and finally net indirect tax. Because these 9 items are only expenditures, the remaining 3 items are not expenditures, so that is why we have omitted. So ultimately we got the answer, that is rupees 1650 crores. We have one more method to discuss, which we will discuss in the next class, that is income method. And students, remember one thing, whatever be the method we use, whether it is expenditure method or income method, it does not matter. Your answers for both the methods should be same. That means if today I use expenditure method and we got the answer 1650 crores, when next time we use the same example, that is income method, we will get the same answer. So with this I would like to conclude today's session. Thank you so much.